Let's welcome our guests on the show. We have Sudeep Bandyopadhyay of Indie Trade Capital and Shilpa Rout of Prabhudas, Lilladher, who joins us on the show. Hi, ladies and gentlemen. Thanks a lot for joining in. Shilpa, you go first. You tell us what are the levels you're looking at on the Nifty itself? Until what level on the downside will you maintain this positive stance? In the sense, is it 23,200, 23,300? What is the level you're looking at on the downside?
Nigel, on a broader term, I would require, I would think about 20,200, to act as a crucial support zones. Till those levels are held, I believe on a little longer time frame, you are, somewhat okay, and you can see levels of 24,000 to 24,300 also coming in. So 23,200, any declines towards those zones should be ideal to go long for a little, positional play. Talking about Bank Nifty now looks like, if you're holding above 50,500, which was a resistance, and from there we have seen a spring effect, and you have almost tested, 52,000 mark. So this is where, any declines, if you find towards 50,500, as long as we are holding, I believe that levels of 53,000 to 53,500 can also be achieved.
Okay, all right. Hold on to that thought. Well, the finance ministry officials, they met with capital market participants ahead of the budget. Surbi, tell us more with regard to details that transpired in that meeting.
Well, yes, I did manage to speak to a couple of people who participated in this high-profile meeting. And I think most participants came out feeling quite good because the interactions are very open, transparent, and it seemed that, finance ministry officials were very receptive to a lot of the suggestions that were being made. The overarching demand, I think, by most capital market participants was continuity. Don't change anything. Things are going well for the market. So in terms of taxation as well, I think the request is that don't tinker with at least the equity market taxation on the capital gains front. But four specific issues that really stood out. So I want to sort of flag these off. Number one, divestment of PSU stocks. One request that came in from industry was, whenever the government is looking at the next leg of divestment, please look at stocks that have low float. Because the rationale given, and it seems absolutely fair to look at it this way, is that some of these stocks which are very low float, there the risk of speculation could be much higher. There the valuations could be going out of whack. And in some cases, maybe there's even a bubble forming. So it's better that the government releases more stock in the market so that we don't have these valuation issues with PSU stocks. Number two, the hot new subject, which is taxing the F&O side of the market. Now, there was an acknowledgement that, yes, both SEBI and the government, it would sort of be in their interest to ensure that retail investors are protected and that there is no excessive speculation or big losses that they suffer. So how do you do this? One suggestion was, from the tax perspective, that look at taxing the big fish more. The giant whales who come in with these high-frequency trades and these, big algo-based hedge funds, their trading volumes are far bigger, so their capacity of absorbing losses would be bigger. So you increase the securities transaction tax on this category of traders by putting thresholds on the turnover. So, for example, this was just a suggestion that maybe make a threshold of 1,000 crores of turnover, and a higher STT rate should be applicable to traders or hedge funds above this turnover, and retail will be kept out of it. So that's on the F&O front. It's a moving piece, so let's watch what happens with respect to regulation around the F&O market. Number three, coming to mutual funds, and their specific ask is to overhaul the regulatory framework to allow mutual funds to also offer pension products. Life insurance companies offer pension plans, and of course you have the NPS, which is governed by the PFRDA. Mutual funds also want the regulatory ambit so that they can offer specific products, which could be diversified funds, but at least the marketing around them, the wrapper could be in the form of some sort of a retirement saving or a pension scheme. Last but not the least, there was an ask by Indian asset managers that get Indian-run funds. These are global funds. They're not run in India, but they could be run in, let's say, a jurisdiction like Singapore or US. Get them back home. Get them onshore here in India. Because they are being managed by Indian asset managers. So what needs to be done to do this? Two things. One request from the industry was that the safe harbor regulations, which have been sort of in place for many number of years now, they need to be overhauled and compliances need to be lowered so that these global investors can actually, come in and these funds can be set up here in India as well. And the second issue is really taxation. The funds which are right now being managed out of Singapore and US, individual investors don't need to deal with taxation issues. Taxation is at the fund level. And that's what Indian managers are asking, that allow us that same framework here in India. So, as they say, it's all about make in India. So, invest in India, invest from India. That seems to be an ask as well. Overall, very happy takeaways that the finance ministry and officials there and the minister gave a very patient hearing to some of these suggestions.
Okay, all right. Surabhi, thanks a lot for joining us and, in fact, filling us in with that neat piece. Well, let's focus on a couple of stocks then. Sun Pharma, that stock was underperforming today. It was down close to 2% in trade after the US FDA issued a warning letter for its Dardha unit. Ekta joins us to run us through a quick analysis on that front. Ekta?
Well, yes, Sun Pharma's Dadra unit was in focus today because they have received a warning letter for that particular facility. Now, why is this important? Is because it is a facility which supplies to the US. It contributes around single digit in terms of revenue, but the news was largely expected. Why is that? Because in December of 2023, when this plant got inspected, they received 6 observations which were, which concerned the street at that point in time. Then they received an official action indicated status for this plant, which was issued in April of 2024, and then now it's escalated to a warning letter. So the street was anticipating some kind of regulatory action from December onwards, just based on what they saw when they came to the observations. But it's not an import alert. However, we don't know whether it can eventually turn into an import alert. But as of now, the street is anticipating that because there hasn't been any kind of escalation to an import alert, things could probably be limited to a warning letter. Warning letter, production doesn't stop as of now for their current drugs. Only the new approvals stop. So that means that business continues as per usual. We will have to see the impact of the new pipeline of drugs from this particular facility, which could get impacted. And separately, remember that Revlimid generic is also manufactured from this particular plant, and hence the earnings impact could be on account of that, but is expected to be limited.
Okay, all right. Take that. Thanks for that. Sudeep, quick comment on this one. Sun Pharma underperforming in today's trading session, a quality franchise. Will you look to buy into it?
Not really. In fact, there are a lot of issues as far as generic pricing is concerned, and that pressure is real on the prices. So I'll wait and watch as far as this entire, the large pharma is concerned, who have significant presence in US and business in US. So I'll probably avoid at this stage. Of course, I think this particular issue may not be so serious as what the market is perceiving it to be. It's just a warning and doesn't affect anything as things stand today. So that's pretty much what it is. If I have to look at pharma, I will look at pharma companies which are focused in domestic market, and Mankind Pharma is the first name which comes to my mind with about 95-98% exposure in India. And that's a great space to be in.
Okay, got it, Sudeep. Well, with that, let's move on and talk about one of the stocks of the days. Mass Financial was buzzing in trade. The stock surged in today's trading action. We learned from sources that the company plans to raise up to 500 crore rupees via the QIP route. Abhishek has more details. Abhishek?
Well, to begin with, sources tell CNBC TV18 that Mass Financial is looking to raise funds via QIP, and the company was looking to raise about 400 crore with an upsize option of about 500 crores. And the issue has been well subscribed. Now, sources do tell us that it might have been subscribed 8 to 10 times with respect to the demand that has come in. Indicative size was about 1.75 crore shares. Offer price was about 286 per share, which is at a discount of 8.4% to yesterday's closing price and about 5% to SEBI floor price. The book running lead managers are Motilal Oswal as well as Equirus. Now, calculation shows that the equity dilution would be around 10.65%. Net worth will increase by more than 28%. So the book value accretion kind of a raise. This is book value will increase by 16% to close to 125 per share. Now, capital adequacy ratio at the end of FY24 was about 24%. With this fundraise, it can cross 30%, and it may increase by 650 to 700 basis points based on the calculation. In the near term, the net interest margin can expand given the fact that you have free cost of funds coming in. However, ROE may get dented until and unless the leverage plays out. Back to you.
Okay, thanks for that, Abhishek. Shilpa, final question before we let you go. Any individual stock that you're looking at which is looking good on the charts?
I believe, Nigel, for tomorrow's session, one can look at Indian hotels yet again. The stock has been showing very strong strength. This robust move up, towards all-time highs today at around 639 in futures. I believe the stock is very well placed to even see a little more up move for 660 to 680 zones with a stop loss of 625 from here.
All right. Okay, Shilpa and Sudeep, thank you very much, both of you, for being with us and answering all our questions today. We do have to take a very quick break. We'll come back on the other side and then, of course, get you all the key events to watch out for tomorrow and, of course, all the big corporate voices that we picked up today.